Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks just like yourself all over the country get the most out of that oftentimes confusing higher ed retirement plan. This video is no exception at all. I'm going to do my best to confuse you and myself at the same time here when it comes to TIAA Traditional. So let me tell you what's going on. Well, let me preface this a little bit. Anytime I get when people reach out to me, and I get all kinds of folks reaching out to me, which is fantastic. So I get all kinds of stories, some good, some bad, and once I digest the information, if it's of value to you, my goal is to relay that information to the masses out there in higher ed, hopefully enabling you, helping you make more informed, better informed decisions, specifically when it comes to that TIAA stuff, because it gets a little confusing. So what happened today is that somebody reached out to me, and I tell you what, I'll ask, hey, if anyone out there knows the answer to this question, because I got stumped, and so did TIAA. So with that being said, here's what happened. A person reached out to me, she reached out to me, looking to retire shortly, and going over all kinds of options. I get questions like this all the time. No big deal if you want to reach out to me. 10-year TPA, 7-year TPA, how to create liquidity, interest-only payments, yada yada, everything and anything and everything under the sun, which is perfectly fine. Then we started talking about the single life annuity option versus joint annuity option. She's married, she's got a couple kids, and I told her, okay, annuity 101. What we can start off with is that 100% of the time, that single life annuity option is going to pay more than any joint annuity option, given the same parameters. And I went through my spiel, and she said, well, she knows what she's doing. She did her research. She had a retirement income illustrator in front of her. If you don't know what that is, it's a fantastic tool. You should utilize it if you're looking to implement any strategy on your own with TIAA Traditional, which can get very confusing. So she had it in front of her, and she said, let's back up a little bit. According to my income illustrator, the joint annuity option is going to pay more than the single life annuity option. And I said, no. Something's amiss. I promise you that single life annuity option is going to pay you more. And I said, well, let's do this. Let me send you a Zoom link. Let's do a screen share. And I bet in 10 seconds I can figure this out. This isn't my first rodeo. Well, 20 minutes later, I couldn't figure it out. She was right on. Joint annuity option. So check this out. Here were the options that we had, okay? So we did a comparison chart, right? We had three scenarios we were comparing. Joint, here's the first one. Single life annuity option, 0-year guaranteed, paid, I can't remember the dollar amount, so $3,000, okay? Let's just make it up. Joint life annuity option, 2/3 paid to beneficiary, 15-year guarantee period, paid like $3,003, like a $3 difference. And then the next one was joint life annuity option, 2/3 paid to beneficiary, 20-year guarantee. I can't remember, it doesn't matter. The payment was still more than the single life annuity option. 0-year guarantee. So I looked at all the variables that we input, because you can change the variables. I couldn't figure it out, and I said, ma'am, I'm stumped. Very, very rarely do I get stumped when it comes to this stuff. I can't figure this one out. So let's do this. I'm going to call Tia. Give me 5 minutes. Let me call Tia. And I placed her on hold, did the whole phone, circus thing, and called Tia on my own. They won't talk. I have an institutional team I talk to. I told this lady 5 minutes. 20 minutes later on the phone with Tia, they couldn't figure it out either. So what we gathered, though, is that it's a mortality formula that figures out these payments, these monthly payments. So it's not a one size fits all. She was married. It wasn't a crazy age difference, but this is what I was told. Due to the age difference and the amount that she's leaving spouse, in this case, is 2/3, the mortality formula that Tia uses, just not coincidentally, just oddly enough, basically had this $3 more, but basically the same as a single life annuity option with a 0 guarantee period, which should pay the most. I even prefaced a phone call with Tia stating that, am I correct in assuming that all variables the same, the single life annuity option 100% of the time will pay out more than any joint life annuity option? Yes, Greg, that is correct. And then we got into it, and they were just as stumped as I was. So also, oh gosh, I don't have time. The guarantee period. So let me go over that real quick. A lot of folks, including this person, was a little confused on the guarantee period. I might do a separate video on this. What it doesn't mean, okay, what it does not mean. If you're married, okay, and let's use this case for an example. She's married. It does not mean that the beneficiary, let's use a 20-year guarantee. The beneficiary will get payments up until 20 years. Another way of saying, if the main participant dies within 20 years, a lot of folks think, in this case, the husband will get payments up until that 20 years. No. TIAA Traditional, if you choose a joint life annuity option, okay, it could be a 0-year guarantee. That beneficiary, in this case, is your spouse. In this case, the husband. So if she predeceases the husband will get payments for the rest of his life. Now, if they tacked on a 20-year guarantee, typically where we see this is they have children, okay? So in this case, in this scenario, we get a 20-year guarantee. Husband and wife pass away prior to the 20 years. Child or children will get payments up until that 20-year period. If husband and wife live after 20 years, children get 0. Okay, that's not why I'm a huge fan some of the time, a lot of the times, for estate planning purposes when it comes to these lifetime income annuity options, but that's a different video. What you can take away from this, I have no idea, other than it's confusing. Single life annuity option should pay more than that joint life annuity option, but maybe what you can take away from this is that make sure you know your options. Why? In this case, there's no reason she wanted to choose a single life annuity option anyway. She's married. We did liquidity strategies anyway. We didn't even choose a lifetime income annuity option. But make sure you just have all your ducks in a row, I's dotted, T's crossed. I guess what you can take away from this is it is dependent, the beneficiary, the payments are calculated based on, when you're throwing in the beneficiary here, joint annuity option, calculated based on a mortality formula that I don't have a clue what it is, you don't have a clue what it is, and I don't think Tia, has on the phone here when I talk to them or you talk to them, they have access to that information. That's long enough for today, folks. I think that covers a lot of information, drinking from a fire hose there. All right, Greg Shepard here, S&A Financial Services. Hey, go out and have a good one. All right, take care. Bye-bye.